don't buy a house right now. Is that something that you've been told? Is it something that you're maybe thinking yourself? Well, either way, you're not alone. There are a lot of opinions out there right now about not buying, that now is not a good time to buy. And we're going to talk about that today, along with all the other economic and real estate related news that we go through on Monday. Welcome back, everyone. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. And every Monday, we're here talking about a bunch of different things, economic factors that affect the real estate market, like CPI, as we're about to talk about, and other things. And then, of course, Phoenix real estate. So thanks for joining me today. Last week, I mentioned that we were going to get CPI and PPI data. If you could even hear me, because I had some microphone issues with the volume turned down. So today we should be all good to go. But last week, good news on CPI. It shows the inflation gauge rose 3.2%, which was less than expected. And that's good news because that affects mortgage rates in a positive way. That type of news can potentially bring rates down. So we're happy to see that. And then also we're happy to see that inflation is going down because it makes it a lot less expensive for us to live. We also got the PPI data that came in last week. Treasury yields increase after producer prices are a touch hotter than expected. So the opposite happened with the PPI data. It actually came out as a 0.3% increase month over month and 0.2% increase year over year. It was a little bit hotter than expected, as this says, and U.S. Treasury yields rose on Friday. Why do we care? Because typically mortgage rates follow the yield on the 10-year Treasury. Now, I am not a mortgage lender, and I certainly don't know the ins and outs of mortgage rates and how they're affected, but I try to follow them as best as possible so I can give you guys an idea of what's going on, so you can check in with your lender or ask questions to a lender specifically if you have those questions about what's going on, whether you're buying or selling. So that's what happened with the PPI data, and that kind of negatively affected mortgage rates. Now, it doesn't sound like there was a major change last week, but it wasn't the best news for mortgage rates. So let's go over to Mortgage News Daily. And if you are interested in learning about mortgage rates and what goes on and how they're affected, check out this website. This is excellent. They have daily news on what's going on. They also have generally what rates are looking like that day. So this is a great resource. And frankly, this is where I get a lot of my information. So this is a long article. And if you want to get into the nitty gritty of how rates work, this is a good one to read. I'm not going to go through the whole thing, but the title is Rates Are Officially Breaking the Rules, but why? And so it talks about what happened with rates last week. The CPI came out, and that was positive news. It was good for rates. It came in below the consensus. And then it goes on to say, as seen in the chart above, the indecisive trend resolved towards lower levels last month, with core inflation falling 0.16%. It matched the same level the new data released this week. If this were the only thing that mattered to interest rates, rates would be much lower than they are today. But they found other things to worry about. The following chart on the 10-year Treasury yield serves as a benchmark. It goes on to kind of explain this a little bit further, but and other factors. They are also talking about the rise in oil prices has some economists thinking that the next few inflation reports might not result in the same easy victory. So we've got a few things in the future that could make rates more volatile. And I think the bottom line from last week, it sounds like, is we saw some volatility in rates down, up, and ended the week a little bit higher than they hoped. So if you're in the market to buy right now and trying to lock in your rate, check in with your lender. It is so important to be doing that right now because rates change so frequently. And if you're a seller, know that rates right now are not too favorable for buyers at the moment. But we're going to talk more about the Phoenix real estate market and buying and selling and what's going on in just a second. Don't buy, right? This institutional home buyer has completely stopped buying. Why the 2023 housing market has Wall Street types timid. So this institutional buyer, Yield Street, reduced its home acquisition levels by more than 90% in the second half of 2022. That's not shocking. If you watched my video a couple weeks ago talking about iBuyers, Open Door, OfferPad, they both saw a drastic decrease in their purchases around that time too. And so it's not shocking to hear that. However, fast forward to August 2023, not only have house prices in the majority of housing markets stabilized after last year's mild price correction, but interest rates have also seen an increase. And so they're talking about how the combination of spiked interest rates and sky-high house prices significantly reduced the potential return for single-family rental investors like Yield Street, and they're not buying anymore. And so I don't know if they're going to start buying again, but you also have to think that if that's happening with an institutional investor, that's likely also happening with a mom and pop investor. More so possibly because they have less capital than an institutional investor. So what happens if these institutional home buyers stop buying homes? Is our supply going to increase significantly? It's a good question, but we do have such low supply right now. So if it did increase significantly, would that be a huge factor in our market? Personally, I don't think that is going to make a huge difference, but it's definitely something to keep our eye on. Now, they're not the only people saying don't buy. Also, record number of Americans say it's a bad time to buy a house. I'm sure you're not shocked by this because this is a lot of at least what I hear from people, whether they are clients or friends or family or just talking about real estate in general or in the comment section on my YouTube video. A lot of people say don't buy right now. And there was actually a monthly survey that came out. More than 8 out of 10 think it's a bad time to buy a home, according to a monthly survey of consumers by mortgage giant Fannie Mae. So you got to think, if 8 out of 10 people in the US are thinking that it's a bad time to buy, that likely will kill our demand. So what's going on with demand? It's really low right now. It's not a shocking thing, but if we have institutional investors saying they're not going to buy, we also have more than likely like mom and pop investors also saying it's not a good time to buy. And then you just have your typical, families out there saying it's not a good time to buy. Do we plan to see demand going a lot lower in the future? It's something to keep an eye on. And then where is this supply coming from? So let's talk about what's going on in Phoenix. Let's talk about, we're going to use the Cromford Report, of course, because they actually had a really interesting observation about prices in Phoenix that I want to share with you. And then, of course, we're going to talk about the CMI and what's going on in the various cities. But first, if any of this is of value to you, consider subscribing. I would love that, and a thumbs up. Give me a like and share this with others if you think it would be helpful. Okay, let's look at the Cromford Report. So this is the observation I wanted to share. And I'm just going to read through it because it's written well and I don't want to try to misinterpret what they're saying. But I wonder how many people 12 months ago were expecting the average sales price per square foot to be essentially unchanged a year later. Probably not very many. Most observers, and especially the iBuyers, were in abject despair after the quick price decline that occurred between June and August of 2022. And so this is the monthly average sales price per square foot, showing where we're at today, the pink line, as compared to 2022. And we've basically met back to where we were last year at this time. We were definitely lower than last year for quite a while, but things have changed throughout the year, and we've gotten back up to where we were at this time last year. And I think most people didn't think we would kind of recover in that way. So this goes on to say we're actually 20 cents lower today than a year ago. To just be very specific on that. But in the last 12 months, the average dollar per square foot dropped as low as $264.17 in the second week of 2023, only to recover by almost 8% in the 7 months since then. An 8% rise when demand is far below normal reminds us of the important effect of the chronic lack of supply in our housing market. The average dollar per square foot is up almost 48%. From the same point in 2020. It is not a bubble, so it is not bursting. So that's the opinion of the Cromford Report as they're looking at these monthly average sales price per square foot. I'm trying to give you that whole graph there so you can see the previous years as well. But What is this now? So they're saying that we've recovered in prices and we have a lack of supply and it's not a bubble. Yet we're seeing institutional investors pull out and we're seeing the average American saying it's not a good time to buy a house. Well, according to the Cromford Report, it's not a bubble. We're recovering in prices, and our very low lack of supply is really what's keeping us in the place that we're at today. And we also have low demand too. So what's going to happen if demand gets lower than supply? Well, in that case, we're definitely going to see prices come down. But let's look at where our demand is at right now. If you're new here, this is the CMI, the Cromford Market Index, and they've created this to help us understand supply and demand. And so 100 is that normal range. So we have our demand here at 77.5, which is about 23-ish% below normal. Demand is certainly low. Then we have supply, which is at 48.3. Again, if 100 is normal, then we're at 52% below normal for our supply. So right now, supply is much lower than demand, overall putting us into this mild seller's market at 160.6. Anything over 110 for the Cromford Market Index means that we are in a seller's market. So that's where we stand today as far as the CMI goes here in Phoenix throughout the metro area. And then let's look at every city specifically. And this is showing the current market index for all of these cities. So Chandler is really leading the charge here at 312.6. Remember, anything over 110 is the seller's market, because in Chandler, supply is really, really low. I was just helping a client last week who's about to list their house. We were looking at the inventory in their zip code, and it was like 14 homes for sale or something like that. It was insanely low. So that's what Chandler is suffering from right now, but also their demand is on the low end too. But at this point, supply is just much lower than demand. And then we've got Glendale, Fountain Hills, all of those kind of in the top spots here. But you'll notice a lot of red arrows. And I talk about this every week, but the red arrows show a deterioration for sellers. The CMI, when they look by city, is looked at from the standpoint of a seller, whether they have the advantage or a disadvantage. And so those red arrows mean that their advantage deteriorated a little bit when we compare month over month. The change is here. So 5% in Chandler, Glendale 5%. So the CMI reading has gone down by that much month over month. And you can see where we were at last month. There's only 2 cities that saw improvement for sellers over the last month, and that's Cave Creek and Buckeye. And overall, we see an average change of about, I think, 5% this week with all of these cities. And here's the thing. The last 3 to 4 weeks, the average change in the CMI for all of these cities has been a negative trend and increasing in pace. Basically, it was 3.3%, 4%, 5%, 5.1%. I think somewhere in there. So every week we were seeing more and more deterioration for sellers on average with all of these cities. And this week we only saw 5% compared to the 6% last week. So maybe this trend is slowing down. Maybe it's just an off week. It's hard to tell when you're looking so closely at week by week data, comparing month over month. But if that trend continues, then maybe this deterioration for sellers is starting to slow down. Typically, summer is a slower season for us anyway. So it's not surprising to see the CMI kind of weaken a little bit in addition to the low transaction volume that we're seeing right now. However, as we get into the fall, we start to see more buyer demand typically, and we'll see what happens. If maybe this is the first indication of strength coming back into the CMI. Maybe not. but we'll see. So I want to hear from you guys. Do you think it's a bad time to buy? Are you one of those 8 out of 10 Americans that were surveyed that said don't buy right now? Put it in the comments below. Let me know, and let me know what you're thinking. If there's anything that we can do to help as a team, check the description. We have a link where you can set up a discovery call. You can also get your instant home value from a link in the description, as well as searching our MLS for homes for sale. So reach out with any questions. Thank you for watching, and I will be back later this week with some more market data about Phoenix. I'm Caitlin McKegg with the Desert Dreamers team.